This is question number 5 on homework 1, problem 2-15. So we are provided with a bunch of numbers. You can see that most of the numbers are from the income statement. So I think the first step is basically to construct this income statement based on these numbers. So part A, what was the 2017 operating cash flow? If you check my lecture slides for this session, the formula to the operating cash flow, you can find the formula from my lecture slides if you open the lessons. It's basically we start from so it's right here. We start from EBIT. See, it's operating cash flow equals EBIT plus depreciation expense minus current taxes. So then if we know that, we can construct the income statement. So sales, start from sales. Sales is, we just copy the number. Let me use Excel to solve this problem because it's easy to construct the income statement with Excel. So the next item is the costs. So here the cost, I believe, refers to the cost of goods sold. So again, copy this number back. And then we have other expenses. Other expenses. So it could be selling, general, administrative expenses. And then we have the depreciation expense. Depreciation expense. So we know that now we can actually define this EBIT. EBIT basically is, so let me zoom this. So this equals sales minus costs minus other expenses and then minus the depreciation expense. So the next item is interest. So interest is right here. So you got to be very familiar with the basic items on the income statement. That's the requirement to answer this question. So EBT basically is EBIT minus interest. So this is my taxable income. Now taxes will be based on this EBT given the tax rate. So now tax is actually provided. So we just copy this number back, and then that gives us the net income, our bottom line on the income statement. So this equals EBT minus tax. And then we further provided with dividend, right? Because we know that net income can go into two channels. First, part of the net income can be distributed back to shareholders in the form of dividends. So dividends is basically given by the setup $12,000. And then the remaining is what we call the addition to retained earnings, right? Addition to retained earnings. And from this dividend and net income, we can actually determine that it's basically the difference between these two numbers. So now we know EBIT, we know the depreciation. And then we know the taxes. So we have everything based on the formula of operating cash flow to calculate this operating cash flow. So operating cash flow will be that equals EBIT plus depreciation minus the taxes. So this is the answer to the first part, operating cash flow. It's right here. So let me copy that number back. And part B, what was the 2017 cash flow to creditors? So for creditors, we know that they can get cash flows in two forms. One is this interest payment. The other one is the change in the amount of debt the firm issues, especially the long-term debt, because only the long-term debt, in general, only the long-term debt has the interest. So we want to match the interest, the creditors who receive the interest payment with the amount of debt, which is the long-term debt, which belongs to them. So, and then the question tells us, the setup tells us that the firm redeemed $4,600 in outstanding long-term debt. And if you go to the slides again, you can see that the formula for the cash flow to creditors is interest and then net issuance of new equity. So the net issuance of new equity here comes as a positive sign to the firm, but it's a negative sign to the creditors, because if on net the firm issues more debt, more long-term debt, that means the creditors have to pay the firm, and then the firm. So from the creditor's perspective, the cash flow turns out to be a negative. So that's why here the interest, we have to use the net issuance of new debt, deduct this net issues of new debt from the interest, and then arrive at the total cash flow to creditors. So now if this number turns out to be the firm redeemed, so rather than issuing new debt on net, the firm actually redeemed this much of the debt over that year. So that means when the firm redeemed the debt, the firm has to pay those creditors cash. So from their perspective, that's positive cash flow. So this $4,600 should enter as a positive number. So if I write down this in my note, this should come as a cash flow to, let me use B to stand for the bondholders, and this is for the creditors. Cash flow to creditors is basically the interest and then minus the net issuance of debt. So net issuance of debt in this question turns out to be a negative number because the firm actually redeemed $4,600 on net. So this turns out to be a negative 4,600. So now you have a negative sign here. So negative becomes positive. That's why earlier I explained that you have to add this much of the redemption of the outstanding debt into the interest payment, and then you get this cash flow to creditors. So interest payment is right here. 40. Let me just write down this. 14,600. And let me write down this in full so you don't get confused. So this is minus and then minus again 4,600. Again, this minus becomes positive, becomes plus. So that's why you end up with this So that's my, then we can now put this number into my Excel sheet and finish the calculation. Cash flow to creditors basically is the interest payment is right here, plus 4,600. So that gives me 19,200, and copy that number back. And part C, what was the 2017 cash flow to stockholders? So similarly, from the stockholders' perspective, if you go back to my lecture slides, cash flow to stockholders is dividends and then minus this net issuance of new stock. So let's check whether we have the information available here. So you are told that the firm issued 6,100 in new equity during 2017. So that's basically my net issuance of new equity for stockholders. And then we are also told the dividend. So then we can simply calculate the cash flow to stockholders. That's basically the dividends right here, and then minus. Here we have to take a minus sign because the firm does issue new equity on net over that year. So the amount here is this $6,100. So it's automatically correct. So this will be my final answer for this part of the question. Cash flow to stockholders. And then finally, if net fixed assets increased by $22,000 during the year, what was the addition to net working capital? So to answer this part of the question, we need first we need to know what the so-called cash flow identity. So that means what this cash flow identity means is that the total cash flow, or what we call the free cash flow, or cash flow from assets. So the total cash flow equals the cash flow to creditors plus cash flow to stockholders. What this means is that over the year, the cash flows which enters or flows out of the firm should equal to the sum of the cash flows which goes to its investors. So here the investors include both creditors and stockholders. And then we further know that if you go back to my slides again, the cash flow from assets, what we said earlier about the total cash flow, is basically operating cash flow minus the change in net working capital. So you see that the question is about what is the addition to net working capital. So that's the change in net working capital. So from this formula here, we have connected with what we are required to calculate, and then minus net capital spending. So this net capital spending will be connected with this information provided, the change in the net fixed assets. Because one way to get this net capital spending is basically is the change in net fixed assets. If you check my slides here, the first way is the change in net fixed assets plus depreciation expense. We also told about a second way, which is change in gross fixed assets, basically. But here we are only provided information about net fixed assets, or the change in net fixed assets. So we can use the first way to calculate the capital spending. So let me finish that part of the calculation. But before that, so let me write down what was the how can we calculate this change. Let me summarize what we just discussed in this note. So basically what I said earlier is that this cash flow identity is cash flow from assets is equal cash flow to creditors or bondholders plus cash flow to stockholders. And we already calculated cash flow to creditors and cash flow to stockholders. So this part of these two numbers are known, hence cash flow from assets is known. But another way to get cash flow from assets is simply we start from operating cash flow, and then we minus the change in net working capital, and then we minus the net capital spending. But net capital spending is basically is the change in net fixed assets and then plus the depreciation expense. So that's how you can connect all these numbers. So now with the information provided with for the change in net fixed assets provided and depreciation is given, so we can figure out this net capital spending. And then operating cash flow, we did the calculation in part A. So then, and because cash flow from assets can be obtained from these two numbers, so ultimately we can solve out the change in the net working capital based on these equations. So that's the way to go. So now let me go back to my Excel sheet and figure out the net capital spending first. Again, this equals the change in net fixed assets plus depreciation. So the change in net fixed assets is right here, $22,000. So, and then we can just copy that number back, and then we add the depreciation expense. So it's right here. So because I have the comma sign, that's why Excel asks for auto correction. So I accept that. And then with that information, we can also calculate with the information about cash flow B and cash flow S, we can calculate this cash flow from assets, which is basically the sum of these two. So now we have everything ready to calculate the cash flow, the change in net working capital. So let me write explicitly this formula given all this calculation. So now if I move this negative, the change in net working capital to the other side, and then it will change sign and becomes positive. So now I can solve out this. The change in net working capital equals operating cash flow, and then minus net capital spending. And then I have to move the cash flow from assets to the other side. So when I do that, I change sign, so that becomes a negative. So cash flow from assets. So that's the formula to get this the addition to net working capital. So now it's operating cash flow minus the net capital spending minus the cash flow from assets. So then I can just addition to NWC that equals we start from operating cash flow, and then we go back to this minus the net capital spending, and then we minus the cash flow from assets. So then we're getting the final part of this answer. Okay, so now it's time to check my work. Okay, great. We got all these numbers right.